There's a couple different ways to use them. A lot of traders use them to try and trade in between, buy when it hits the lower band, sell when it hits the higher band. That's one way to use them. Another way
How you doing, Harlan?
I am here. Joel's on a roll.
I'm on a roll.
Joel on a roll?
What'd I do?
Yeah, he is. Yeah. Well, I heard you talking about the S&P. We're going to look back at yesterday's highs. What's so special about yesterday's highs? If you look at that and the NASDAQ composite, you'll see off these lows and off the most recent peak, you dang near tagged the 61.8% Fibonacci. And you got an initial reaction off of those zones. So that's information you can use. We sold off after tagging that into the afternoon, and here we are. You're looking at a retest of those highs right in here. So it's an inflection point. We're going to find out if this resistance zone in both of the major indexes do get defended. If resistance gets defended, well, then you got to watch out for any further upside, which I doubt you'll see. And even if you do, where are you going? The 50-day moving average? So
yeah, it's tough.
So I'm kind of in agreement with you, Joel. I mean, I think you got to watch these highs. If these highs get sold, because strength is getting sold.
It is really, and a lot of the stocks are corresponding to it as well. Now, you had a little fear in the market yesterday, the unfortunate incident in Ottawa, Canada, and now no news on that, or I don't know if the situation's still going on. Dennis, you're saying that
I think there's still caution, but I don't think there's too much more happening there.
Lone wolf.
No new news, hopefully.
Yeah, that's what they're talking anyway. So when you look at it from that perspective, though, here we are. We're right back up into resistance zones. We want to see if this resistance gets defended, and if it does, there's plenty of names out there that a person could probably short. The interesting thing is the markets these days are so dependent upon what the indexes are doing. We've heard the phrase 3 out of 4 stocks trade in the overall direction of the market. Well, given that the indexes are really big, the SPYs and things of that caliber are really, really traded heavily by institutions, everything is pretty well dominated by the indexes. As the indexes go, so do a lot of stocks. So I'm seeing tons of stocks that all they've done is snap back right up into resistance zones. So, you got to trade what you see, and you have to honor resistance.
What do you think? Do you think just like these managers, you already had some managers underperforming the market as of last week. Then you get a huge decline, and these guys are probably thinking, "Oh my God, I'm getting killed on the market, but I have to lighten up." It just seems like they just turn around and sold, and then everything that they turn around and sold, they turn around and bought right back up. And the charts are demonstrating it. Is it just chasing return? What's the driver here?
Well, I guess it all depends on the individual manager because, what is that phrase? 75% of all mutual funds can't beat the index. So,
I think it's even higher than that,
yeah, their bogey is the index. So, all they're doing is overweighting, underweighting specific areas within the index. They're cookie cutter index funds. A lot of these managers are. So they're really not trading. Their bogey is, we need to maintain as close to the index as possible to justify our existence. Of course, we have to beat it by a few percent because otherwise, why would anybody want to put their money with a manager if he can't beat the index? Because you can go out and buy the SPYs for what? How much? Quarter point a year, or whatever it is, as a management fee. So they are pretty dependent on the indexes. It's the traders out there, the high frequency guys, your trade bots, your algos. Those are the guys that are creating a lot of the havoc out there. Sure, they provide liquidity on the way up, but on the way down, they just tend to step aside. That may be the reason why you're getting these big flushes.
Well, we've talked about that in the past too, Harlan, where we know high frequency traders are out there and they provide a ton of liquidity when there's nothing going on. But when there is risk, they're going to back off the quotes. But the old market makers backed off the quotes too. So it's not just something that's
Right.
new to the market here. I mean, whenever there's risk out there, people are going to back off their quotes and widen their quotes because it's just too dangerous.
Right.
You can't go in there scalping a penny when you're going to lose $1. So it's somewhat
Well,
understandable too.
when in doubt, spread it out, right? And that's what they're doing. They're spreading their risk out, and why play when I don't need to? And you see these markets, they'll gap down and gap down. A lot of these market makers go, well, we know we're going to get hit on the open, so let's just drop our bids way down there.
Yeah, but there's one big difference here, Dennis. I mean, when I posted two-sided markets, in Oldie and the stocks that we traded, yeah, you could widen your spreads or whatever, but you were there. You were there.
Your bid was soft.
You were there, and you got hit,
Right.
and you had to take it. I mean, that's a whole different ball game where wow, this is really
no
volatile.
affirmative
There's risk
obligation
here.
anymore.
Oh man, hey. Go turn the machine off for a little bit until we got no. That's not market making. That's not
Right, because
trading.
you have to maintain a market.
Yeah.
And that's exactly
Yeah.
it. We don't have those obligations on anyone anymore. The floor is gone. Your traditional market maker with those obligations are pretty much gone. So we're relying on a lot of participants that don't have any obligations to continue to quote when there's weakness. And that's where you can see a stock like Disney fall 5 points on Ebola Day with no bids there because there's nobody obligated to quote that thing. And it'll just go wherever it wants to. And when it's wide open and there's no bids or offers out there, it can really trade down in a hurry. And we saw that with the stock like Disney that day. So you're right. It is completely
Wasn't that something?
different. That was
Yeah,
incredible.
it was. So, there are people that do tend to step away. And when you get in climates like this, things tend to get amplified. You get reactions that get amplified to the downside. And, what have we just seen the last 4 or 5 days? You're getting a reaction in the opposite direction. Will it get overreacted to? Who knows? If you hit a higher high today, maybe it does a little bit, but you still got a ton of resistance up in here. And markets, these V bottoms, they tend to be unstable.
Okay, let's get into some individual issues here. All the charts look the same. I mean, they
They all look
have.
like
they
these
do.
V
Yeah.
bottoms that he just said.
Yeah, I mean,
Well, yeah, a lot of them do, but you know what? But take a look, though. Take a look at a stock like, how about Autodesk, ADSK?
okay.
That's interesting.
If you got a 6-month chart, you can see this thing broke support at 53, got slammed, and all it's done is rally back up into that 53 zone, overhead supply zone.
Yeah.
So, you get these reactions, and then they come right back. That's why you can't short weakness. So much as, buying strength, you can't really buy strength either because, shortly thereafter, you just get it handed to you.
So were you
Same
able?
thing.
Go ahead, Dennis.
I was gonna say same chart, similar formation. I was looking at this one yesterday. I actually had a decent trade on AMC at X, which is AMC Networks. They do the Walking Dead. Stock was looking at this and it really broke down. That 60 was a number that really jumped out to us. And look where it got to yesterday. Got right up to just under $60 there and then peeled back. So these stocks, when they break down from these support areas and they come back to retest them, sometimes they're pretty decent setups.
Yeah, pretty much. So, you're getting issues that come back to the scene of the crime, if you want to think about it that way. They come back
Right.
to the scene of the crime to test those levels to see what they're made of. Not only do they test those levels, they test investors. So, they're testing your emotional stance. So, I'm looking at AMCX, and what do you see about it? Look at this thing. I mean, it goes all the way back. How many people own this thing up in the 60 zone? You're seeing that, even 3M that you were talking about earlier. So
Yeah.
now all of these people that owned it, that didn't cave in the face of fear last week when the S&P was hitting that, support level, they're gone. But you know what? Now these other people that had a little patience, they're going, you know what? I'm right back up at break even. I'm right back
Give me
up
my
at
money
overhead
back.
supply.
Yeah.
Yeah.
Give me my money back.
So, you got to honor that too, and you got to think about that too, because there's always somebody on the other side of your trade. And what are they thinking?
Harlan, you got me talked right into it today. I think this market could make this double top today. I'm looking at this S&P futures, 1943. We made the sneaky little double bottom down there at 1810 a week and a half ago on the Ebola lows, and now we're up here and we're retesting yesterday's high here. Pretty much right now, we're 3-4 points away from there, but that's the level that I'm leaning on here. Do you think we're going to do that? You think we're going to give some of these gains back here today?
Yeah, I do. I'm just going to trade what I see.
Okay.
You
Well,
know, and I'm seeing resistance.
yeah, it
You
is.
know,
It's
I'm seeing
there.
resistance in a lot of names. So, you know, at the least, you're in a zone. So, and if it goes a little higher, you know, you've got another level of resistance. Markets will keep looking for, you know, levels of resistance. We blew through the 38% fib retracement. We blew through the 50, you know, and yesterday we kind of looked at the 60, 61.8, and you started to struggle there. There's an initial resistance level. You know, and sometimes you have to sit there, you know, much like Joel, you said, you know, you like to see stocks stabilize at support levels. Same thing. You want to see stocks tag resistance levels and not be able to get through that ceiling.
And, you know, the reason that you have these kind of formations is, you know, obviously the institutions and the bigger players in stocks, I mean, they just, you know, it takes, you know, 1, 2, 3, 5, 6 days to get out of a major position. And, you know, sometimes they'll be a little bit sneaky. You know, they'll put, you know, a stock there at one level twice, and then they're like, okay, everyone knows I'm here. They'll pull out the offer. They'll let it get up 35 cents above the offer, and then, you know, they tell the floor broker, hey, go sell me, you know, a million shares down to, you know, down to the hook, you know, to the numbers.
Mm-hmm.
So, a lot of interesting setups.
Right, because I mean, if you're long 1 million shares in a bad market, you know, try and get out of that. You're just going to blow it up on yourself.
Yeah, especially, I mean, to get a piece done like that, and I know we talk about it, you know, frequently here on the show, but, you know, come on, you know, when you trade it in 8s or 16s, I mean, if you really needed to, you know, if you wanted to move a good chunk of stock, you wanted to move 300,000-400,000, 500,000 shares, I mean, you could get it, you know, you could get it done with a couple orders, you know, instead of having to piece it up 100, and then the algos catch on. It's a completely different market. But
Right.
Harlan,
Why do you think they sell their peanuts while the circus is in town? They
there
got
you
to have
go.
a ready, willing, and able buyer.
Yep. Were you able?
For every seller, there's got to be a buyer.
Was there anything that you were able to pick up on the cheap last week? Because I think you were on last Thursday. You know, we were in the midst
Talking you off the cliff. Yeah.
Yep.
Thank you.
But you know, I mean, you know, that's trading extremes. I mean, think about it. There is huge money made if you can trade the extremes. You have to be willing to step in the face of fear, you know, at support levels. Sure, support levels get broken, but, you know, when you start seeing a market sell off in, you know, 5, 6, 7% in 3, 4 days, you're going to, at some point, get a reaction. And that's the point in time where the markets start to look for any little bit of news that it can hang its hat on to cause it to get up and run. You know, so, you know, and look at yesterday. Isn't it ironic how you hit these resistance levels and all of a sudden, you know, we get this news, you know, out of your guys' neck of the woods, you know, in Ottawa, and, you know, and it just a good reason to sell. We've made a nice run, so, you know, how much does that come into play, too? For news-driven traders, that's not me.
I don't want to throw fuel on the fire here, but if you look at the dailies here, you know, not only are we trying to form a double top, but how about a triple top? Because your high on Tuesday was 1939.75, 1943.75 yesterday, 41.50 today, Dennis. Now I'm getting you
Big
really,
number.
Big number. Yeah, just call it 1940 because, you know, a lot of times, you know, 1940, 1950. I mean, I like to go with particular levels, you know, that I see from a daily high or low. But just like in how big orders congregate at whole numbers, you know, in stocks, so they do in the indexes. Well, Harlan, is there anything that you happen to pick up on the cheap, you know, last week? getting a surprising move on it. Now, you're more apt to move your stop up, right? And as opposed to is to trying to, to juice, get the most out of it or parcel out. What anything today that you're looking to move your stop up on, or some key levels and some individual issues you're looking at before we go on to Rob Hood stocks?
You're right. Yeah, no, we're 100% cash.
Really?
So looking to short. Yep.
Wow.
Wow.
Yep. We're 100% cash, looking to short.
Wow.
So, I had a few names. I had one name, AVGO, that when the semiconductor debacle took place, you wake up and bam, it's down 5-6 points, and it's like, well, if I would have set a stop at say 78 or something, well, guess what? Guess where I'm going to get filled? You're going to get filled at 75 because it blew right through it. So I opted to hang on to AVGO. And, I looked at the chart and I looked at all the semi-stocks. All they did is come back to prior support levels, hit the 200-day average. And I'm like going, well, if I sell now, I'm selling after the fact with the market in the face of fear at support. After I just got done talking, people off the cliff, why should I sell now? I'll just wait for the bounce. And sure enough, we got the bounce. And I think we stopped out. We bought it at like 80 and change at the 50-day. Before all this happened, and then you had that big gap down. That's the funny thing with these big gaps. You don't have any control over them because you never know when they're coming. Oh. So it came rallying right back up, and, we walked away, I think, in the 78 range. So I took like a 2-point hit on it. But look at all the semi-stocks. All they're doing is snapping back up to resistance levels. So here's another sector theme that's got a ton of overhead supply up here. So, we sell strength, and sometimes you get bruised and you get caught up in something like this. That happens because they happen so fast that I said, I'll let the dust settle, let it bounce, and then we'll walk away.
Harlan,
now we're back to 100% cash.
Well, when you're talking about 100% cash, I mean, Dennis and I have different accounts. We have swing trading, we have short-term trading, and then a long-term investment account. So are you talking 100% flat, like in your trading account or your long-term investment account?
Both.
Everything.
You don't even have any long-term investments right now.
Not anymore. Sold the Apple on earnings.
Wow.
Apple popped, blew it out at 103, and so it eked a couple 50 cents higher. Big deal. So, but and then you take a look at Apple, and it's like, yeah, it's got a base. It could break out. If it does, it's going to break out on negative divergence, RS divergence, and I don't know. These breakouts are, kind of funky right in here. It tried to break out and, it got turned back. So who knows what Apple's going to do. Facebook did the same thing. It rallied right up to resistance yesterday and started to turn tail. So who knows if they're going to work out. Remember, we're pretty dependent upon the indexes right in here.
Yep, and they're
trying. So indexes roll over, chances are, these names are going to pull back with it.
Okay.
Now, who knows where we're going? Next stop, if resistance stands, I'm going to be looking back at watching that 200-day moving average to see if we can stabilize down there at the 200-day average on the S&P, which seems to be 1907-ish. And it seems to be, I'm going to say about 4308 on the NASDAQ comp, which the comp has a gap, by the way. So we've seen this time and again where gaps tend to get filled. So that's the first support level I'll be looking for if indeed resistance sticks. So where's some of those Rob Hood stocks?
Oh, Rob Hood just want to quickly know about Travelers Group, which is TRV. And this one's interesting because it actually did break out there yesterday to a new all-time high. And it's hard to find stocks breaking out to new all-time highs in this market. But TRV, just sneaky little one, just beat it by 10 cents there yesterday up at 96.29. It did peel back, but in the pre-market, it's bid up at an all-time high here again right now at 96.42. So he wants to know your thoughts on Travelers Group just real fast because we're almost out of time.
Yeah, it's a base. It's breaking out. And, the key here is, follow through will be key. So, I think if you own it, you just go by the book with regards to breakouts, and if they fail, then then they fail. A lot of times we see these shake and bakes. They shake you up, they get you all excited. Hey, it's it's breaking out. I got to buy, and then they bake you. So be aware of that, because short term, we've came a long way in a very short period of time in the indexes. So, but if this thing can hang tight in here, it might be worth hanging on to. I don't know if Travelers is the type of growth name that's going to get up and go. But I see the pattern, and I can't disagree with what Rob's saying on it. If you're a breakout buyer, you did exactly what you were supposed to do. Now it's just got to stick.
Harlan Pyan, co-founder of All About Trends. He's our weekly guest on Thursdays mornings. You can find his products on MarketFi. It is All About Trends. So thank you, Harlan. We'll see what the trend will be for the remainder of the session. We've got your thoughts here on the market. Thanks for coming on. We'll talk to you next week.
Thanks for having me. See you later, guys.